Welcome to Wall Street Confidential, the show we give you the inside scoop as to what's really happening on Wall Street. I'm Greg Greenberg, here with Jim Cramer. And Jim, it seems like the Bears are feeling a little bit empowered today.
Yeah, the Bears are in charge, which is why the only part of the market that you can buy right now are the defensives. You can buy a Heinz, a Procter. It was up too much yesterday, so it'll pull back. A Bristol-Myers upgraded by UBS. That makes some sense. 4% yield could help. But you're only bottoming one-third. There's two-thirds that are still to come. And it's very easy to craft a lot of negative scenarios. I love it when people are coming on immediately now on TV and saying, whoa, I'm not that bullish, which is perfect. I mean, you have to have certain things. I think that what people have to understand is that you can be short-term bearish within a long-term bullish environment. It's hard to come in and not suspect that there's a yen trade that has gone awry or that SunTrust is causing. I mean, I can find you, if you want, I can detail 20 reasons why it should go
I'm sure you could detail 40
right now, and that it should go to 11,000. It's very easy to craft either scenario.
But since this is Wall Street Confidential and you know the hedge fund industry, let's talk a little bit about this carry trade. Because what it is you're borrowing cheaply from Japan, right, and then you're going elsewhere to invest in Brazil, etc. Right. So what you have to do eventually to unwind that is you have to actually buy yen, so the yen has been strengthening from 122 to 18, and you're going to have to sell those emerging market bonds, so you're going to be selling your rupees and your reals. Now that's scaring people because they think that there's might be another long-term capital or something. What's going out there in the hedge fund land? How dangerous is this carry trade?
Well, this carry trade has been going on forever. There's periodic times where it unwinds or where we hear that it's going to unwind and it scares people. There's periodic accounts that we discover get margined out here. This is all business as usual. Obviously, it's business as usual within the context that it's very easy to scare people. I remember when the yen carry trade was supposed to wipe out Lehman Brothers. Obviously, long-term capital took many, many weeks to unwind. Now they're back in the paper today. Meriwether's back in the paper making money. This is noise.
Yes, it was because I was at Lehman Brothers during that time.
This is all noise. It's about the slowdown. It's about how the Fed has to recognize that there's a slowdown. It has to recognize that a SunTrust loan is endemic for a lot of other things, that Fremont General is now New Century Financial, which is Novastar, which could be accredited home lending. And this is what happens. I mean, I think that what you have to do is just play in that one area. We don't have any leadership other than the Heinz and Mo. I can't find anything good to say about tech. We're in a seasonally wrong period of tech. Obviously, the commodity stocks are coming down. Gold's coming down. So let's just focus on the only area that you can make money unless you want to be short. And then you can short everything other than the soft goods stocks.
Is there a disconnect between what the press is doing and what Main Street is looking at? It just seems like the press finally has a bear story. And CNBC, and you saw it on the Times, on the papers, they're hitting it hard. And Main Street, maybe they're still figuring it out.
Well, remember that there's a tremendous amount of cash on the sideline. And that's because there's no other alternative other than cash. Cash is paying you so much money. I don't want to look at what causes the Fed to cut. I'm just focusing on the Fed cut. Because if you look at what causes the Fed to cut, it's going to look like the end of the world. And when you're in the end of the world
earlier are increasing. And you called that earlier.
They're going to cut.
You made that call.
You have disaster and crisis and then cut. Now, the key thing here is, can people take the pain of the crisis that is clearly developing? And I think they can take the pain of the crisis with diversification, take the pain of the crisis with food and beverage, with Softco, with Clorox and Colgate, but not with anything else.
All right.
Nothing else is going to work.
Jim Cramer says, drink and eat your sorrows away if you
nothing's going to work.
Withstand this crisis.
Other than that.
All right, I'm Greg Greenberg, not Herb, not Ace, not Hank. This is Jim Cramer. We'll see you back on Wall Street Confidential.